Hey Swing Trading family, this is Super Swing Trader. I hope you are doing well. Today we're going to take a look at some charts and see where we can identify supply and demand zones and trade it for income. Before I do, if you're new to this channel, here I talk about swing trading using the rules of supply and demand and technical analysis to trade with the big banks, hedge fund managers, and professional traders, and not against them. If that's something you're interested in, please make sure to hit the subscribe button and turn on the bell notification so you can be notified whenever I release a new video. Also, drop a comment below. Let me know, have you guys placed any trades and have you made any money with swing trading using supply and demand yet? Comment below yes if you have and no if you haven't. I really appreciate your comments because it helps me tailor my content to best serve you. Apart from that, let's get right to evaluating the charts. Okay, let's take a look at the Canadian dollar versus Swiss franc FOREX pair. But before I start, I get a lot of questions about my charting software. The charting software I use is TradingView. It is a web-based charting platform, so that means that you can access your charts anywhere in the world as long as you have an internet connection. You don't have to install any third-party programs or browser extensions to access your charts. If you upgrade to the Pro features, you can split your charts into 2 or more charts at a time, like how I have here. That way you can do your top-down analysis faster and go through more Forex and stock charts faster, saving time on switching through monthly, weekly, and daily charts. If you're interested, the link is in the description below. On the left hand corner here, every candle is 1 day. On the bottom right corner here, every candle is 1 month, and 1 week. And these candles on the upper right corner here, every candle is 1 month. Let's do a top-down analysis, looking at the monthly first. It looks like it dropped and then it's been consolidating ever since. But in the meantime, it is still forming supply and demand zones. So it formed this one, and then looks like it formed another one here. A really wide demand zone that's been tested multiple times. So it tested. So as mentioned in the previous videos, if a certain zone has been tested multiple times, the odds of it rallying after that is very slim. Once it's tested, it's more likely to break. So we see that it's been tested multiple times. So in this case, if it's a fresh demand zone, I would not short, but since it formed this bearish engulfing candle here, and looks like it's gonna penetrate deeper and deeper into this zone. And on the weekly, let's take a look. So our nearest demand zone is down here. Then we have supply zone up here. Then we also have the nearest supply zone we also have is right here. And that's what we have for the weekly. Going short has been tested. It's been tested here and here already. And then let's take a look at the daily. Daily price rally, drop, base, rally, drop. So you can see that there's a supply zone form here. If we zoom in, we see that there's a little pip breaking this supply zone, and that's what Forex will do. That's why these zones, most of the time it will work, but sometimes you have to make your zones just a little bit wider. Sometimes it will come here just before it touches the zone, and then it'll drop. And then sometimes it will just penetrate by a little tick, and then it will drop too. So when you enter your trade or place your trades, just put it a little bit farther out and the stop loss a little bit farther out. That way you're giving yourself enough cushion and just manage your risk properly. But in this scenario, it looks like this demand zone, this supply zone is pulling up. It's moved pretty well. It's holding this price. Price went into it, and it's looks like it's going to drop because we see that, okay, supply zone is in control on the weekly. This monthly made a bearish engulfing, so there's room for a price to drop all the way down here. So that would be all the way down here. So that would make a pretty good target, pretty good target for risk to reward on your short. So let's see if the price will move down there or if it will go up. We see that there's really no demand zone down here, so it created the supply zone, it dropped, and then it should go lower until, you know, it touches this about down here. So we have a pretty good risk to reward on this trade if anyone took it. And that is the analysis on Canadian dollar versus the Swiss franc. Thank you very much for watching this video. Please remember to give it a thumbs up if you enjoyed it. Leave a comment below. I'd love to hear from you. And if you're not already subscribed, please click the subscribe button and also click that little bell icon. Then that way you'll get notified of the next video that I publish. Thanks again for watching.